Lately, we've been hearing the same headline over and over again. Renting is now cheaper than buying in many US cities. And on the surface, that sounds like a strong argument for continuing to rent. But is comparing this month's rent payment to this month's mortgage payment really the full story? In today's video, we're going to talk about why the rent versus buy debate is much bigger than a monthly payment, and why making a housing decision based only on short-term costs could have long-term financial consequences. I'm real estate broker and CPA Sharon, and today we're going to discuss the rent versus buy debate. So let's get to the root of the matter. Renting is cheaper than buying. I feel like I'm seeing that headline everywhere. And I understand why, because it's not entirely wrong. Recent national studies on affordability have indicated that with rising ownership costs and add-on expenses like insurance, property taxes, and HOA fees continue to put pressure on buyers' budgets. And the research backs it up. So Realtor.com, Bankrate, and Axios have all documented that the affordability gap in major US markets is getting wider, and that buying is actually less affordable in the short run than owning. And while I understand the appeal of the short-term argument, because at the end of the day, at the end of the month, you either have to pay rent or pay mortgage, and if one of them is bigger than the other one, it's harder to make that payment. I think if you look at it just as a short-term evaluation, you're really missing the big picture and you're missing the moment. And most of the articles, if you dive a little bit deeper, you'll see that they say the same thing, right? It's not just renting is cheaper than buying and therefore you should rent. It's talking about, if the articles that dive a little bit deeper talk about the long-term consequences and how there is a bigger play that we're looking at rather than just this month's expenses, comparing renting versus buying. When you rent, as I've said on multiple occasions, that's a pure expense. There's nothing else coming back. You're trading money for a place to stay. That's it. That's the end of the transaction. When you own, you are trading money for a place to stay, but in addition to that, you're actually purchasing an asset. You're actually making payments towards having something that will be valuable to you in the future. And so to really evaluate the rent versus buy argument, and to be fair to both sides, it's important that you think about it from all of the perspectives, not just from what this month's liquidity is going to look like. No, this is not to say that there are not cases in which renting makes the most sense for someone, right? Renting can absolutely be the right decision depending on your circumstances. If you're planning to move soon, or maybe you just started a new job, or your income is uncertain for a new job or another type of reason, or you have had credit issues in the past and you're looking to rebuild credit, renting may be the best option for you. Renting isn't bad. By no stretch of the imagination is that what I'm trying to convey. I'm just a big believer in having my money work for me. And so if I can have the money that I have do two things instead of one, aka provide a future asset and provide a place to stay versus just providing a place to stay, for me that is a win. And so that is why I am as passionate as I am about the whole concept of home ownership and what it could mean for the future. When you're buying a property, you are playing the long game, so to speak, right? Because for the first few, and I have clients who have said to me, buying just doesn't make any sense because I feel like for the first few years, all I pay is interest. And it is true, the overwhelming portion of the payment that you make within the first 5 years of owning a home is going towards interest. However, if the timeline is longer than 5 years, you get into 5 to 15 years, now you're going to start seeing some steady appreciation. Not that it didn't appreciate in years 1 through 5, but for sure by year 5, you should start to see some serious appreciation in relation to what you purchased the property for, and that will continue to compound itself over time, right? And then year 15 on, if you're fortunate enough to have been in to have purchased using a 15-year mortgage, then you're either at or very close to having paid off for the property, so you own a free asset, no leverage on that, no debt. But if you're in a 30-year vehicle, which is what most people purchase property with, you should have paid down a significant portion of that mortgage, and that combined with the appreciation that's been taking place over the last 15 years can be a significant nest egg for you, for your future, and for other projects, retirement, vacations, opening a business. Well, however you choose to spend those funds, they are available to you. Some of the hidden costs that go with waiting to buy is that rents keep rising. So monthly rents often go up annually every year. The landlord adjusts for inflation, and oftentimes there is a consumer price index natural adjustment that is included in your rent. Prices go up. That's what we're counting on. Home prices will continue to go up so that the people who purchase will take advantage of that appreciation in the form of increased equity. The more that the house is worth is the bigger the down payment is that you need to have, even using the same percentage to get into the property. So if you're buying a house for $200,000 and your down payment is 5%, that's $10,000. If you're buying a house for $300,000 and your down payment is 5%, that down payment is $15,000. So as prices go up, the required down payment, even at the same percentage, is going to increase, and is going to require you to come out of pocket to a greater degree to be able to purchase the property. And then, of course, last but not least is the opportunity cost, the missed appreciation. While you are waiting to make the decision to buy, the values of homes went from $250,000 to $300,000. That's $50,000 of missed appreciation that you've walked away from, that you will never be able to recapture, because that is now a part of the marketplace value, and you weren't an owner while that was happening. So very important to keep in mind. One of the things that is important to keep in mind is that when you have a fixed rate mortgage, it does create a certain element of predictability, right? So for the most part, the principal and interest portion of the payment will stay the same. You will see an increase, a small increase after that first year. You will see an increase in property taxes as well as in insurance. So it won't be exactly the same, but it will be, your payment won't be exactly the same, but it will be similar. In cases where there's rent, the rent is going to be driven by market conditions. If prices are going up by 10%, then rents typically will follow suit. There is not as much protection in renting as there is in owning when you're looking for that stability and predictability of the payment. So another thing to keep in mind as you're evaluating your overall options as it relates to rent versus buy. As I alluded to earlier, for me, buying a home is important because it becomes a financial tool. There are several ways that you can use the equity in your home just to be available. You can get a home equity line of credit. You can refinance the property to pull the equity out. There are a bunch of ways that you can tap into that equity and use it for other resources. You can also rent out a portion of the property if you don't need to use all of it, and that can generate income for you. When you are renting, typically you would have to have the landlord's permission to be able to rent out or to sublease a portion of the property, should you choose to do that. That's typically what most leases call for. When you're the owner, you can make that decision. The big win, as far as I'm concerned, is the generational wealth aspect. You are creating something that you can leave to future generations. If that is your desire, you are creating a financial legacy that can change the lives of those who are coming behind you. And then last but not least, not as important now as it used to be, but there may be tax advantages. And while most people file the standard deduction, so they don't typically take a deduction these days for property taxes and for mortgage interest. Depending on your situation, you may be in a space where you can take advantage of those charges, and you know, if you're itemizing, you can still deduct them from your taxes and get that tax advantage as well. So all of these are different ways that a property that you own can actually have a positive impact on your bottom line, as opposed to just renting where you're exchanging money for accommodations. So one of the things that I hope that this video will do for you is reframe the questions that you're asking as you're trying to contemplate buying versus renting. And the question really shouldn't be, is renting cheaper than owning this month? That is, I think, a very myopic approach and doesn't do you justice in the long term. Instead, I recommend asking yourself questions like, where do I want to be in 5 to 10 years? Because in 5 to 10 years is when the real magic of home ownership starts to manifest itself. How stable is my income and my lifestyle? And do I want long-term housing security and stability? If you are looking to formulate a strategy that's going to pay dividends in the long run, as opposed to just mitigating short-term costs now, you really owe it to yourself to consider buying as a strategy, not as a reaction to the headlines, but as a solid strategy that will help you move forward and really establish you 5 to 10 years out financially in a way that renting just absolutely cannot. The right decision for you is absolutely going to depend upon your goals, both short-term and long-term. For some people, renting now is the only option, and if that is you, then you have to do what makes sense for you based on where you are. If you do have the option to choose between renting versus buying, I hope that you will take a longer term approach and look to see where you want to be 5 to 10 years out and make a decision that is going to support those goals. If you'd like to have a deeper conversation or speak specifically about your situation, please feel free to visit my website at simplyaskSharon.com, where you can schedule a 15-minute phone consultation with me. It's absolutely free. There's no charge or obligation, and I'd be happy to look at your personal circumstances and let you know what I think from a professional standpoint makes the most sense for you. I hope you found this video helpful. If you did, please remember to like it, and also please subscribe to my channel so you can be notified when new videos get released. Thank you so much for watching, and I look forward to seeing you the next time.